So Bursa Malaysia has actually designed a whole webinar series for you, and we dedicate like every first Tuesday as a webinar for beginners. So if you're beginners, please reserve your Tuesday of the month. Every first Tuesday of the month, this is the webinar for the beginners. So today we talk about dividend yield masterclass, and next month, the first Tuesday, we'll talk about the power of earnings. And on the second Tuesday of the month, we will design this Chinese webinar series for you. So if you prefer to learn in Chinese, then you can reserve every second Tuesday of the month for us, which is 8:30 to 10 o'clock. And next Tuesday, we are going to talk about 菜鸟成功投资三部曲, which is the successful investing for beginners. Okay, three things three things that the beginner investor should know. All right, and we also do the advanced series, but advanced series for this year so far has ended, and then of course we have more in store for you next year. Okay, now who the heck is Ian Tai? All right, he is the gentleman next to me is the content producer for ksilao.com. Okay, he is of course, if you're aware, then ksilao.com is the leading personal finance blog in Malaysia. And Ian Tai produced a lot of contents for KCLA and is also considered like a partner. Okay, and then he is also a columnist of the Fifth Person, Value Invest Asia, and majalah.labo.com. Okay, and he himself is a dividend investor. He collects 8 to 9 months in dividends from his personal stock portfolio in every year, averaging about 6+% per annum in dividend yields. That is amazing, isn't it? On average, I would say that if you go for dividend yield stock, you can probably get 4% on average. That's from consider regular companies paying dividends. But Ian can manage to get portfolio. Dividend yield is more than 6% a year. So I think this is an incredible result from a dividend perspective. So today we have invited him to share with us his experience in doing dividend investing. All right. So can you tell us more? What actually is dividend investing?
All right. So first and foremost, before I answer your question, thank you so much for such an elaborated and very enthusiastic introduction of me and myself.
Okay.
So
yeah, you're welcome.
And it's always fun, and I'm very grateful to be here today to do this webinar with Bursa Malaysia, and of course with Shane Chu today. So thank you so much for having
me. I think you need to sit closer to me.
Yeah, I think I should sit
so they can see you.
Yep. So I believe you can see me and as well as Shane, all right, equally handsome.
Thank you.
Okay. So I think your question is on what is dividend investing, right? I think we can't just explain it in words, all right? So today what I've brought to you is actually an actual stock that I've purchased in the past, all right? It did very well. And I'm going to share with you, very importantly, if you are listening to me today, you can actually take this opportunity to pick my brain on why I buy the stock and what is my process like when it comes to assessing the stock, whether to buy or not to buy, and why do I buy at this certain price. So this is actually a session where you can actually understand me better as a dividend investor, and more importantly, hopefully that you can pick my brains. If it works for you, that's awesome. If it doesn't, then I hope that is an eye-opener to you. But if it works for you, then hopefully you can take this same strategy, same method, and use it onto your own portfolio. And who knows, you can actually replicate my kind of success. And because all these things are replicable. Okay, I've actually prepared a lot of stuff for you guys, so let's just
prepare some game for us, right?
Yeah. short game. Okay, so I always like to start off with game because I'm more of an experiential kind of person. So that means that I would like you guys to actually participate. That's why there's a game. So let's play a simple game, right? Now, we have a question, and let me just ask this question to you guys. So which of the two stocks would you invest into? Is it A, stock A, which is priced at 1 ringgit, or B, stock price at 10 ringgit? So which of the two stocks do you think is cheap? Do you think it's worth investing? So why don't you just type in the poll and let's see your results.
Okay, so if you like A, you type A. If you like B, you type B.
Okay, so for those of you who have already typed A or B, maybe you can actually type in the reasons why you want to invest in A. So if you type in A, just type in the reason why you type A. If you type B, so you just type in the answer, why do you choose B as a preferred stock to invest into. So what are the answers? What are the general consensus by the people?
Yeah, some say A, a few say B, many say not enough information.
Okay, so for those of people, so the answers are mostly A, right?
Yeah,
More than B, right?
because they say it's cheap.
It's cheaper. Okay. So are there any other answers? Or
Yeah, some says that not enough information.
okay, so that is the
Yeah.
second most received feedback. Not enough information.
Yeah,
The first one is A because cheap.
yeah. If the other variables remain constant, like the EPS, PE, all are the same, then of course, some of them will pick A.
Okay, so let me review to you my own personal answer to this, my personal approach to this answer. So for those of you who type in A, I believe it's because the price is $1 and therefore you think it's actually cheaper. All right, and of course, from a layman term, all right, from a layman eye viewing this particular question, you may actually be tempted to actually put in stock A instead of stock B. All right, but I will go with the second most received feedback, which is actually not enough information. All right, so that to me is a much better answer, which is true because when it comes to stock investing, right, you cannot just look at the price. All right, so for those of you who type in stock A, so this is actually the first key golden nugget that I'm going to give it to you today. All right, stock investing, right, does not start with stock price first. You cannot determine whether a stock is cheap or expensive by just looking at the stock price. So the approach usually taken by stock investors is the second approach, which is not enough information. That to me is a much better answer, right? So there you go. I cannot decide because there's not enough information. And that is why as a investor, especially if let's say you call yourself a value investor or a dividend investor, you will tend to number one, look at the stock quality. That means you assess whether a stock A or stock B, are they good stocks or are they bad stocks? That's the first question that I would like to answer. Then the second question I would like to answer is stock valuation. All right, meaning to say, is 1 ringgit good? Is 1 ringgit for stock A cheap or expensive? And the same goes for stock B. Is it cheap or is it expensive? Now, so let me give you a brief overview on my own investment game plan. So the investment game plan is actually very simple. It is always to have a systematic approach when it comes to investing. So there are 3 parts to it, to my own personal investment game plan. The first one is actually to separate good stocks from a list of 900 stocks on Bursa Malaysia. If you want to talk about Singapore stocks, there will be like 700 plus. If you want to talk about US, it's going to be like tens of thousands or more. All right. But whatever the number is, let's keep it to 900 because we are talking about Bursa Malaysia. It's a webinar brought to you by Bursa Malaysia. Right? So from that 900 stocks, right, I believe you will agree with me that not all 900 stocks are good and not all 900 stocks are bad. So we need a system to separate the good from the bad. And that one, we need to actually understand the business model, read the financial reports, read the chairman's statements. Then only we can separate the good ones that make you money from the bad ones that, cost you money. Okay? So once you have gathered a pool of good stocks, that's where we do system number 2, which is stock valuation, to determine which of these good stocks are cheap or undervalued, and which of these good stocks are expensive and overpriced. Okay, and then the third one is it involves portfolio management techniques, which means let's say you're given a pool of money and let's say you are also able to save up X amount of money on a per month basis, then how do you design and how do you actually build your portfolio so that you can achieve your investment results? Okay, and more importantly, oh yes, before I miss it out, one more thing is that whenever you invest, right, three things will happen. All right, let's say you go in, let's say you buy stock A lah. Let's say you think that the stock is cheap, 1 ringgit. Three things will happen. The first one, it will remain as 1 ringgit. The second thing that will happen is it will go up. Let's say $1.20, $1.50, $2, and so on and so forth. The third one is it will drop 90 cents, 80 cents, 70 cents, and so on and so forth. The key idea is not to predict prices. The key thing is to be prepared for all these three scenarios, because in the future, right, one of these three will happen. So you might as well have a plan to tackle these three possible scenarios in advance before you buy your share. All right. So this is actually a difference between most of the people who just buy and hope that it will go up only. If it goes down, they do not know what to do. But for me, I think it's very important to have a system, have a plan in place in all situations. That one I think is more practical than just predicting stock prices. Okay, now let me go back to the slide. Like we look at system 1, 2, and 3, right? So I have highlighted system number 2 because dividend yield, right, is actually a form of stock valuation. So I will classify that today's webinar, I will solely focus, I'll put most of my attention on to system number 2. And therefore, these are the valuation tools that I personally use in order to assess whether or not a stock is good for investing or is it to be avoided. Okay. Now, in my last webinar, I have actually done this with Bursa Malaysia, but the host is Peter, all right, where I talk about the 4 valuation tools. So I think this is just a recap lah. All right. The first one is PE ratio, which is a valuation tool to assess a stock price against its earnings per share. PEG ratio, which is to value a stock price against its earnings growth. Price to book ratio, which is a valuation tool to assess a stock price against its book value, and its book value is shareholders' equity divided by number of shares. But today we are going to talk about dividend yield.
It's the 4th one.
It is the 4th one, my favorite one. Okay, my favorite indicator, because I'm a dividend investor, so I'm going to put a lot of weightage on this dividend yield thing. So dividend yield is a valuation tool to assess a stock price against its dividends per share, right? Now, the formula is actually very easy. So you just take dividends per share divided by its stock price, multiply by 100%, and as you can see, the example is as follows. If stock A pays about 5 cents in DPS, which is dividends per share, stock A is trading at $1 per share. Therefore, stock A's current dividend yield is 5% per annum. Simple, right? So that is the formula. Okay, class is over. The thing is the application, right? All right, that is the thing that I want to focus today. This one you can get it from from all sorts of websites, including Bursa Malaysia. So I'm not here to present this particular formula, but but I have to present it because it's a masterclass, right? So I need to get this. I need to get this over with. All right. Now I'm going to come to as we go on, we are going to be more and more technical. So just bear with me. Now the second part is this. Hey, just now I thought you have prepared a poll, right? So why don't we do the poll now?
Oh, all right.
Yeah.
Sure. All right. So before we go to part 2, can we just do a poll? Okay, let me launch a poll now.
Actually, so by right, I shouldn't be. Oh,
which do you prefer as an investor? Okay, please click one of which that is more favorable to you. Okay, if you were to pick one, which one will be your favorite? Is it capital gain or dividend yield? Okay, I've seen that 60% of you voted. Okay, let's open it for another 10 seconds. All right, if you were to only pick one, which do you prefer? Okay, I'm going to close the poll right now. Okay, let me share the result with you. And then the poll result is from the participants' point of view. 48% of you prefer dividend, capital gain, while 52% of you prefer dividend yield. That's why you show up today.
Yeah.
For those of you, 48% of you that prefer capital gain, today Ian is going to convince you why you should go for dividend yield. All right, let me go back to the slide.
All right, sure. Thank you so much. All right, thanks for participating in the poll. So as you can see, even though it's a dividend yield masterclass, right? 48% of you are still into capital gains. So I'm not too sure whether I can convince you today or not, but I will just stick to my original plan, which is to share my own personal story with you guys, and hopefully you find it beneficial. All right. So part 2 is why do I buy stocks that pay regular dividends? All right. Now I have 8 reasons. So this is part 1 of the slide. So the first reason I'm going to give it to you is very simple. It is actually very primitive, I would say, which is dividends pay my bills regularly. Dividends, if you get regular dividends, right, you can take the money and pay bills, isn't it? Because it's cash returns. All right. So which means to say it's passive income. You can use this for all sorts of bills. All right, like your rent. If you're renting, or if you own a property, then you can pay your mortgages using dividends, car loans, TBN, so on and so forth lah. All right. But for me, usually I don't use. Usually I use this for my insurance payments. All right, because insurance payments are actually quite regular. All right, it's at a fixed amount, so dividends help me to actually pay off my insurance premiums, which I think is actually quite good lah.
Okay.
It allows me to actually.
Your dividend should be a huge sum, I guess.
It allows me to keep on upgrading lah. So that is a very useful thing. That's why I buy dividend paying stocks. The second one is, especially if you are new to investing today, all right, nothing beats the feeling of receiving your first ever paycheck from your stock venture in the form of dividends. All right, that means you buy a stock. All right, what you can expect is this: you may buy a stock, and in 1 or 2 months' time, you can actually receive your first ever paycheck from the stock by itself. All right, and it's all cash. Okay, and that one, I believe to some investors, it can be helpful to build your confidence, to actually move on and progress on as you journey to become a better stock investor. So confidence is very important. You may want to build on small wins in order to go for bigger wins. It's better than you not receiving any cash and the first few stocks that you buy loses money. So so build on small wins. That's very important. And the third reason is usually people who invest for dividend paying stocks, right? They have an advantage because they invest with clarity. So what I mean by clarity, like just now we look at the example, we look at the formula, dividend yield formula, which is dividends per share divided by stock price times 100%. And this dividend per share, right, you can, if the stock pays dividends, you can actually easily get the figure from any annual report, or in fact Bursa Malaysia website. They will disclose this kind of information to you, and you can calculate your returns with greater certainty. Whereas if you invest for capital gains, you won't know where the share price will go. It's not like today you buy a stock at, let's say, $1, and you will know that in 2 months' time it will go up to $2. Who will know that? I won't know that. I hope you know. If you know, then I think Shane will actually invite you to come here and speak. But for me, the truth is I haven't come across that kind of person who knows that in 2 months' time, surely the stock will appreciate in price. In fact, even if that person can do that, it won't guarantee you. It won't guarantee his own predictions, because sometimes human predictions tend to have error. But I won't say that dividend yields have no error. It's just that usually a dividend pay stock which is very consistent, especially the ones that pay out dividends consistently, they tend to have greater certainty when it comes to dividend yields. So that is the third reason why I buy dividend paying stock. The fourth one, which is my favorite, okay, which is this. Sometimes I don't use dividends to pay my insurance premiums. Sometimes I do keep them, all right? And when I receive and accumulate dividends, I tend to reinvest back some of these dividends into more dividend paying stocks. And by doing that, I receive more dividend income. So that's how my portfolio actually snowballed. All right, from a small portfolio, it began to pay dividends, and I take my own personal savings plus the dividends to buy even more dividend paying stock. And from there, I get more dividends. And from these dividends, I go and buy more dividend paying stocks, and so on and so forth. So what I'm trying to say is that dividend paying stocks, all right, when they pay you dividends, you can actually use that dividends to snowball your portfolio building, or your venture into building a sizable portfolio. So these are very helpful. Now, let's go on to the fifth one. Why dividend paying stocks? Because if a stock can pay out dividends on a consistent basis, it shows me two things. Number one, it has a very strong ability, or it has proven itself to be capable of generating profits and cash flows on a regular basis, and it tends to be more resilient in bad economies. So this is what I like about dividend paying stocks. It is number one, resilient. Number two, it has better ability as compared to other stocks that don't pay dividend. It has better ability, stronger ability to generate profits and cash flow consistently. So that is something that I look into as of great importance. And here's the thing: for those of you who wants to invest for capital gains, now this is actually for you. This point is actually for you. Now, capital gains is actually like this, all right? Sometimes we may, here's how I look at things. If a stock price increase, perhaps only, perhaps, correct me if I'm wrong, perhaps the stock, all right, there are more demand for this particular stock than its supply. That means to say there are more buyers than sellers, right? So more buyers, less sellers, therefore the stock price increase. If the stock price decreases or falls, it is because there are more sellers than buyers in the market. Okay, in general terms, that's the case, right? Now, who are the buyers? Okay, so we have the small plankton buyers, people like me, small plankton, retail investors, right, who invest with little capital only. All right, so we have one segment of investors, and then of course as we move up, we may find multi-millionaires, billionaires, mutual funds, insurance companies, pension funds, EPF, KWSP, so on and so forth. All right, as you can see, as I move up as I mention all these names, the amount of capital they have and they possess are huge. All right, so let me just throw this to you. If let's say you are working for EPF or Khazanah or any other financial institutions, and then you have billions of dollars in your hand, all right? Yes, you may use a bit of that money to, speculate the stock or whatever. I do not know, but I suppose most of them tend to be very conservative because they have already promised. Because some of these people, especially EPF, they have already promised its contributors returns. So when they have already made a promise to give you returns, all right, I'm very sure that the big chunk of their capital, right, they don't tend to play. They don't tend to fool around with your money. So they tend to be more conservative and more careful with our money, all right.
Yeah.
Let's put it that way.
Yeah.
All right.
In fact, Warren Buffett is a capital preservationist.
Yep.
Yeah. That means he hates to lose money.
Yes. If he hates to lose money, you think how many pension funds, institution investors also hate to lose money, right?
He rather not make money than to take the risk of losing this money. You get me? So that's why before Warren Buffett invests in a company, he has done a thorough analysis and to estimate what is potential returns and what is the downside risk.
Yes, and normally because of this huge responsibility, and together plus with their huge capital, they tend to actually buy resilient stocks that actually show resilience, strong ability to generate cash flow and profits, as shown as on the screen, the top one. So therefore, they will drive the stock price of this. They will drive up the prices of these stocks, and therefore that's where you get your capital gains because of this demand. All right. Now the 6 and the 7. Now the 7 and the 8 reason. Let me just go through this very quickly. Of course, because of the billion ringgit funds, billion ringgit, all these high-profile investors. All right. Every time there's a stock market crash. All right. Now let's say a big fund has already invested in a certain company. All right. Most likely, they don't react on news or rumors or speculative information. All right. Let's say, for example, something happened to that certain stock. All right. Chances are, yes, they may move some money out from that stock, but if they have a huge sizable holdings, all right, let's say Warren Buffett invests in a company and the company has some form of rumors all right, that is bad news to the company. Chances are he won't just pull everything out from the stock market, pull out everything that he has sell everything that he has on the stock and move on to another thing. He doesn't do that because why? It is actually a lot of money and it's actually pretty long term. All right, and do know that Warren Buffett is not one who speculates his way to his billions. He invests his way into billions. All right, so with these people, with these high-profile investors into these stocks, usually the stock price will not be as volatile as some of the speculative stocks, which doesn't have this kind of shareholders. All right, so if you have a speculative stock and it doesn't attract all these billion ringgit funds, what will happen is that anything goes wrong with the stock, right? The stock price will go up very quickly and the stock price will be battered also very quickly. All right, that's where your volatility in speculative stocks are. All right, and of course, finally we have the 8th reason, which is there's whether in good times or bad times. All right, a stock that makes money, right? People sure want to buy because it makes money. Okay, so that is as simple as that. All right. Now, of course, let me just talk about capital gains. Now, just participate with me. So here are some of the frequently asked questions that I receive from my subscribers and my readers and my viewers. Usually, they will ask me these 3 particular questions. Okay, the first one is this: Ian, what stock should I invest today, especially in 2019? Okay. The second one will be, they will ask a certain stock, let's say ABC Berhad, and they will tell me the price today, let's say 150, and then they will ask, should I buy the stock right now? Okay, so this is usually the second question. All right, there are many questions like this, but I've just generalize it into these 3 categories.
I got these questions all the time.
All the time. So I'm going to address it today. All right, just specifically for you. And the third one is, what do you think about the stock market today? There are 900 stocks in the stock market. There are 900 stocks on Bursa Malaysia itself. So how do you answer that kind of question? So here are my standard reply. Not too sure whether Shane has the same answers as I do, but let's see. So this will be my standard reply all right? The first one, what stock should I invest today? The answer is actually I don't know.
So I don't know is your favorite reply.
I don't know is my favorite reply. The reason being is that I could be investing differently from you. I do not know your financial status. I do not know what sort of mindset you have about stock investing or what sort of skills you have in stock investing. And I do not know how long do you intend to actually hold onto a stock? Okay, I do not know your plan. So because I do not know you personally, as in your financial needs, your financial wants in life, therefore the answer usually I give is, the first one is I don't know. The second one is, why do you invest in stocks in the first place? So maybe you want to find out that. Then perhaps from there you can find out your answer to what stocks you should be investing today in 2019. So it all goes back to your plan. All right, everything falls and aligns with your plan. That's very important. Okay, so if you don't have a investment game plan, or if you don't have a financial plan, it's best for you to get that done first before you come and invest in the stock market. Second one, ABC Berhad is trading at 150. Should I buy ABC Berhad now? Again, my answer is I don't know lah. I always don't know one. Okay, because number one is that I do not know whether how much do you know about ABC Berhad. Okay, sometimes when they tell
But it
me,
happens to be if it happens to be a company that you did case study on, what would you reply? For example, you wrote about the company.
usually like this. Let's say for example, someone asked me about AirAsia lately lah. Say, hey Ian, should I buy AirAsia or not? Then all I need to do is just ask him this lah. So I say, Mr. So and so, do you know how many planes AirAsia Berhad owns? Alright, then I'll just wait for his response. If he couldn't give me a good answer, right, then if he say, I don't know lah, maybe a few hundred planes or what lah, then never mind, I ask him another question. How much did AirAsia make for the past 5 to 10 years? So if he cannot answer this question, right, then I don't dare to tell him yes or no already. I say, then I'll refer him back to this first question with the answer to the first question, which is, why do you want to invest in AirAsia lor? Alright, okay. Because honestly speaking, I do not know your plan, so that's why I don't think it's very responsible for me to say, yeah, you should buy AirAsia today at this price, or no, you shouldn't buy AirAsia at this price. Alright, I won't actually give a straight yes and straight no answer. Usually it goes back to your plan lah. So I know in most cases, this kind of answer may be, Ian, why your answer so disappointing one? I'm not too sure whether you agree with me or not lah. But usually that is my personal. That is what I think the most responsible advice. Not to say advice. This is not even an advice. This is more like an answer. The most responsible answer that I can give to my audience, which is it goes back to your plan. So that is the first thing that people should do before they actually invest in the stock market. If not, you will be just trying your luck here and there, just shooting aimlessly lah, and you're just wandering around in the stock investing, which is not very efficient. The third one, what do you think about stock market today? Don't know lah. All right. Actually, it's not because I don't know. It's just that I do not know what you intend to do in the stock. All right. Because now. But of course, for this particular question, right, I do not actually get it because the market is very huge, and I do not know about the market in general. But I can tell you exactly, all right, for me, because when I invest in a stock, all right, I will be studying about the stock specifically as an individual unit. That means I can tell you exactly how my stock make money, how much it make, why I invest in them, what's the stock price now, what's their dividend yield. That means I am very meticulous and very detailed in terms of knowing the individual stock. But if you ask me about the general market, I don't know.
You don't know. You never read about that, or you do, but don't want to tell them the outlook.
Usually I don't know. Usually I don't know. I may know generally, but I don't use that as a basis to invest. Usually I'm the type who likes to know everything inside out about the company. Then if I like the company, then I'll just invest.
Okay. Then let me ask you this question. Do you think that the external factor is more important, or the internal factor that will affect the share price more? For example, external factor refers to the market sentiment, the operating environment, and the macroeconomic factors. Internal factor refers to more micro one, such as the company performance, the earnings, so
Here's my take.
okay.
First, I will put a lot of weightage on the interior one, which is the company one. All right, because I need to make sure of this thing. You see, why I buy dividend stocks, right? I need the stock to be resilient in bad economies. Meaning to say the macro is actually bad economics, all right? Which means to say I want the stock, right, to make money in both good times and bad times. Good or bad economy must make money. So that is the first and foremost thing that is of great importance to me. Then once I got that sorted out, right, then I look at the macroeconomics. All right. So for example, like let's say, if you want to talk about recent cases like Hong Kong protests, all right, they have massive protests. That one could be external factors that is not related to the company, right? So what do we do when there's a massive protest? Then we see then we see which if it's bad, it affects the market negatively, right? Then we see which of these good stocks drop in price so that we can actually buy in at a great value lah. So
okay.
that's my take lah. But of course, if there's something which is very supportive to the economy and it drives up the stock price, and then the stock that I look at is no longer trading at a good value, that is a no deal lah. All right. So that will be my answer. Okay. So before you ask me about, let's say for example, if today you have a question, Ian, I want to buy a stock, and today the stock price is this. All right. So should I buy or should I not buy? So these are you may actually take a snapshot of this particular chart. I think this is one of the more important charts that I've actually prepared. So here are the things. If you can tell me what is its business model, how it makes money, who is managing the company, how much it has made for the past 10 years, how much does it have in assets and liabilities, how much dividends did it pay out for the past 10 years, all right, for this particular stock, what is the future plans to sustain growth in the future? Is the stock price undervalued or overpriced at today's price, meaning you do all the stock valuation? And what is your return on investment from this stock? If you can tell me all these things in greater detail, then good. Then it shows that then you're an investor. But if let's say I don't know lah, Ian, don't know everything, all these questions semua tak tahu, 不知道 then most likely either you're just gambling or you're just trying to speculate the stock. All right, so this will be your homework, and yep. Now finally, okay, just now if you have been sleeping, right? So so this is actually my true story lah. All right, the case study. Now I purposely slow down because I just want you to pay attention to this. This is my first time sharing a stock that I personally bought, all right, which did actually fairly well, all right. Now, what is important is this: you may actually pick my brain, all right. You may actually study my brain, assess how I actually look at this particular investment, so that if it's helpful, you can actually apply it for your own investment. Okay, so I believe all of us are ready for the case study, and let's get into it. Okay, so today's case study, I would like to bring you this particular stock, which I still own it today. It's called ELK Desa Resources Berhad. Now, have you heard of this stock before?
Heard before.
Heard before. When did you last heard about this stock?
Last week when I received your slide.
Okay, usually this stock, right? All right. If you're out of KL, you probably won't be aware of the existence of this stock. Actually, this stock, for most cases, have been very, very quiet. Seems like nobody wants to talk about this stock. Okay, for obvious reasons, which I will review it to you later. Okay, but anyway, here's my personal purchase price. So as you can see there, Ian bought it at 122. Okay, so it's actually an average price with rights issue. What do I mean by that? It means to say I will purchase this particular stock at a higher price than 122, and then I will qualify for the rights issue, which allows me to subscribe it for a lower price. And once I actually tabulate the total amount of investment into this stock and the amount of shares after I get the rights shares, then that's where the average price is. So my average cost is 1 ringgit and 22 cents. And when I bought this is August 2017. Okay, now here's a big question. Why did I buy? Okay, so I'm going to share with you. Now, at that time, August 2017, if you want to study my brain, here are the information that I had access to. It's the same resources, information. Alright, it's the same information that you can source it from Bersam Malaysia. Alright, but compare Bersam Malaysia and Bersam Marketplace, I still like Bersam Malaysia website lah, because I'm an annual report guy. Although yes, there's like all the financial data and stuff like that, but I'm still a very annual report guy. Okay, so what I can get from Bersam Malaysia is this: the IPO document, the annual report from 2013 to 2017. Why 2017? Because the financial year end is March 2017.
Okay, it's not December lah.
It's not December.
Okay.
Okay, and I can get the quarterly reports from the latest one will be Q1 2018, which is the latest report that ends 30th June 2017. Alright, and I received the renounceable rights issue document. Okay, of course I can receive that. If not, I won't be subscribing the rights issue, the rights shares anyway.
Before you buy the share, you won't receive.
Yeah, before I buy, I won't receive the shares.
You won't receive the.
No, before I buy, I will receive the. Right. I can actually download the prospectus.
Oh, you mean the rights issue prospectus? Okay.
Yeah, I can. I need the prospectus to assess whether I want to buy or not.
Okay.
So I get the prospectus, and of course I got all the stock price information lah. You can actually get it from Bersam Malaysia, Bersam Marketplace, or any other websites like Google Finance and Yahoo Finance. All these things we can get it lah. All right, all free one ma, right now. And from all this information, here is what I gathered at the time. Okay. So basically, Aldesa Resources Berhad, it generates income from two businesses. Okay, the first one is the hire purchase financing to second-hand vehicles. So which means to say they are like financiers lah. They finance buyers who like to buy second-hand motor cars. Okay, so this is their way of making money. And at the point that August 2017, they have about 32,000 customers. All right, so that means to say that's their pool of borrowers, 32,000 people. And how they disperse these loans is through their extensive dealership network. All right, actually they have two offices, but they rely on second-hand car dealers to disperse their loans. And they have established a healthy network of 1,000 of these car dealerships, and that's how they disperse the loan. That's how they find customers. Okay, and at that time, their net hire purchase receivables. Okay, this is something which I think is very interesting. The receivables means to say their loan portfolio. So it is worth 350 million at the time. Okay. Now here's how they disperse the loan. First, they go to the bank to actually get this block discounting payables, which is a financing product lah. So they borrow. Anyway, what they do is that they borrow at a rate of 5.22% or 5.50%, and then they will disperse the loan to customers, all these second-hand motor car buyers, and then they charge them 12.9% to 18.2%. All right, so they lend out at the rate of 12.9 to 18.2% to earn their interest income, and then their cost is the block discounting payables, which is 5.2 to 5.5%, and they will benefit from the margin lah.
So the margin probably is 7 to 13%.
Yep, Yep, that's right, Shane. That's right. So that is 7% to 13% in terms of interest margins. That's how they make money. And of course, along the way, they will have ancillary income lah. That means all the side income like insurance, car insurance, processing fees and service charges for dispersing all these loans. Okay, when you disperse loans, what's more important is that what is their non-performing loan ratio, which I put there NPL. So the NPL is actually 1.2%, which means to say 98% of the loans are okay lah. Means to say they borrow to good customers. Actually, it's not 98%. It's 98.8% of the customers are okay lah. Means when the company disperse loans to their borrowers, the borrowers still service lah.
So an NPL of 1.2% in hire purchase is considered low lah.
Boleh lah.
Okay lah. It's a good
Acceptable
number
lah.
lah. It's a good number lah.
Good number.
Okay.
There's no benchmark for it, but a lower figure is definitely good lah.
Definitely.
Okay, and when it comes to loan loss coverage, at the time 2017, their figure is 289%, meaning to say they have enough resources, right, to absorb any loan losses in case it happens lah.
Do you still remember what is the formula for this?
This one you have to go back to the Bank Negara. They have a report and all this kind of stuff. Like usually bank stocks have all this kind of information. But I think if I want to explain this, right, I do not know whether I have enough time or not. But sufficient to say anything above 100%, I think is okay lah. All right.
That means they have enough reserve.
Yes.
To cushion any kind of uncertainty.
Yes, that's very important. Buffer. You must. That means to say I'm trying to find a stock that is very resilient, all right, very prudent when it comes to their finances. So that's their first business model. The second one, it actually derives income from furniture trading and retailing.
That is very different from the first business that they do.
Yes, I thought they would try to do what courts do because they have higher purchase ma. So I thought that they may offer financing to customers to buy their furniture and stuff like that. But apparently not, or at least I'm not too aware about that. But what I can say is that I do walk past their retail outlets lah, furniture trading. So that's where they sell their furnitures. That's where they retail it lah. Okay, but if you can see here at the bottom of the screen, it may account for, at 2017, it accounts for 30% of the total revenues. But in terms of profits before tax, it only accounts for 1.2%.
That is very, very low.
Yes. In this case,
either the first business is super lucrative or the second business is super not lucrative.
In that case, right, I will put all my focus, right, 98. I will focus 90% on making sure that the higher purchase works lah. Okay, because that's where the income is, right? Okay. So this is actually what I've gathered in terms of revenue. As you can see, the revenues have grown from 30.9 million, mostly interest income lah, all right, because they earn most of their earnings in interest income. 30.9 million, and 2017, their revenue has grown to 94.5 million. But do take note that the big gap that you see, right, mostly the revenue comes from furniture trading. Anything you see lah. If you compare 2016 and 2017, you see there's a huge jump, right? The huge jump comes from the furniture trading. That means it looks good lah, but then does it bring profit? Not so much lah. Okay. But anyway, so suffice to say, from 2010 to 2017, the company has consistently grown its revenue. Okay, so that's a good plus point for me already. Now, if you look at earnings, it has also recorded consistent growth in shareholders' earnings. It has increased its earnings from 13.2 million all the way up to 23 million. Now, as you can see here, be it revenues or earnings figures, I don't take a 1 year standalone figure when I assess a stock. When I assess a stock, I tend to look back at 5-10 years because I want to see the pattern like this. Usually before I invest in the stock, I will actually plot a graph like this, because if a stock can give me this kind of pattern, this kind of nice, good looking pattern of growth, usually it passed my criteria. That to me is very important. Okay. Now, that is the financial results. Of course, there are more to explore, but because webinar 1 hour only, right? So therefore, this is more like a summarized version, just to give you a brief idea on what I'm thinking at the time, what I was thinking at the time. Okay. So when it comes to growth plan, I have screenshot the prospectus. So for your reference. So there are many reasons why a company wants to do rights issue. Okay. But for this particular rights issue, what they are trying to do is this. They are trying to raise about 59 million ringgit in proceeds. That means they issue shares and then they'll get money from investors, 59.8 million. Okay, from which 1.8 million, 1.6 million will be used to pay for its professional fees to underwriting fees for the rights issue, but the remaining of it, it will be used to disperse loan to make the 12 to 18%. Now, if you think about it, what I've just mentioned, this money, right, is all investors' money. If I go back a few slides, right, just now, if you look at business model number 1, block discounting payables, okay, if they use that as a source of financing to disperse loan, it costs them 5.2% to 5.5%. But now, with the rights issue, they have another source of funding. They don't need to pay the 5 point something percent. They just take the proceeds from the rights issue and just give the loan, just disperse loan. So that means the margin, the interest margin I see is higher because of the rights issue. So I think that one I view that positively lah.
But it dilutes the company's earnings.
Got good and got bad.
Okay.
But there are many reasons why a company raise rights issue. All right. But for me personally okay, if it's not to pay off bad debt if it's something more positive for growth, then I would tend to view that positively which means to say, to me, right, not all rights issue are bad
Yeah, I know. So does it result in an increment in earning per share?
Maybe I have prepared the next slide. Let's take a look. Okay, I think I have prepared the dividends per share, not the earnings per share.
Okay.
Because we are doing dividend yield masterclass. All right. So basically, what I see here is that if you can, I've prepared a table, and this is what I've gathered for the past 5 years As you can see, the dividends per share, 2013 is 6.5%, 2014 is 7.5%, 2015 is 7.5%. Then after that, 2016 and 17 is 6.75 and 6.75. But actually, if we base on the dividends declared, this one you can only find it in the notes of financial statements. Every year, the company has actually increased their dividend payments in amount, in full amount, not dividends per share, in full amount. But it was diluted because of the number of shares.
Rights issue So this is adjusted for the rights issue already.
Yes.
2016 and 2017.
Yep, you can say that and that's why it causes a little bit of a dilution But nevertheless, let's just take 6.75. Okay, let's just take the dividends per share as it is. Actually, it is already an adjusted figure. Now, if you look at the share price, right, at 31st March, so here's what I will do. All right. Now, I will calculate the past dividend yields. Just now the formula is DPS divided by stock price times 100%, right? So here's the share price for every single year's financial year end for the past 5 years since it's first listed on Bursa Malaysia, which is 1.27 in 2013, 1.36 in 2014, 1.39 in 2015, 1.24 in 2016, and 1.16 in 2017. And then the dividend yield given is about 5.1 to 5.8%. Okay, so I will even calculate the range. Okay, this is what I gathered. The range is 5.1 to 5.8, which means, and then the average right is 5.44. So here's how I look at things. if let's say the stock price today, um, if I buy it today and the current yield is actually closer to 5.1 or lower than 5.1, let's say 4%, 3%, 2%, then I won't buy. If let's say at today's price I can get a dividend yield of which is closer to 5.8%, let's say 6%, 7%, 8%, I may consider the stock because it's undervalued.
Okay, that means you'll buy at the top of the range of the dividend yield range.
Yes.
Okay, you will compare the past 5 years dividend yield range, and then you'll wait for the stock price to dip until a level where the dividend yield is near the top of the range.
Yes.
Okay,
And that's how I value.
so that is your strategy.
That is my strategy, which means if you want to say when is the time ELK that Eldesa Resources Berhad is fairly valued, it is when the dividend yield average is 5.44%. That to me is fair. Alright, means not good or not bad lah, just fair. If it's 5.1%, it's overvalued. If it's 5.8%, it's undervalued. So that is my take. So at 2017, the latest DPS I get is 6.75%, and with a stock price of 1.22%, 1.22 ringgit per share, which is my purchasing cost. Therefore, my current dividend yield is 5.53%. Okay, which is actually above 5.44. So because it's closer, it's between 5.44 to 5.8. Okay, I think it's.
So you did not wait until 5.8.
I did not wait until 5.8.
So there is should at 5.53.
Yes, because it's above fair, because it's cheaper than fair value. So therefore, I should lah.
Okay.
Okay, so that is my idea at the time lah. Okay, now I look at this particular stock chart. This was when I first bought Eldesa Resources Berhad. Now, if you look at the stock price, here's a question now. Maybe you can participate in the poll. So this is the stock price chart. This is the stock price chart, sorry. The price peak at mid-July, which is mid-2014 at 1.58, as you can see. And when I bought that time, right, the stock price has been going on the downtrend. So most people actually look at this stock price, right? They don't actually look at annual reports and stuff like that. So the question is this: if you look at this stock price chart, right, do you feel scared to actually buy Eldesa Resources at 122?
You're asking me, right?
You can ask me.
I'm contrarian. I see the price go down, I'm very happy.
How about you ask the poll? If you see this kind of stock price, right, are you scared or not to actually get into it?
Okay, please type down your comments in the chat box. Okay, do you feel scared or do you not feel scared?
Scared, right? Happy. Scared.
Okay.
So a lot of people say scared, right?
Yeah.
Takut, right?
Yeah. Okay. Yeah, thank you so much for your feedback.
So most of them actually takut, right?
Yeah.
Yeah, so that's the thing when I buy that time, I actually that's the thing. All right, before you get in, you actually have to prepare. What if the stock price actually falls to 1 ringgit or 90 cents or 80 cents and stuff like that? Why buy more? Actually, if that happens, maybe I'm happy to buy more lah. If let's say I buy at if let's say it just remains at $1, 22 cents, $1.25, then maybe okay lah. Occasionally, if I have money, then I'll buy more. But if it goes up, then I won't buy already lah. Okay, so meaning to say, all right, when at the price that I buy this particular stock, it is when most people takut lah. Okay, but because I did all the homework that I did in the past, that's why I dare to invest a bit lor. Okay, invest a bit into this stock lah. All right, so therefore I went in. Okay, and before I review to you what are the investment returns and stuff like that, so let me just give you my takeaway at that time. Number one, I find that Eldesa Resources Berhad, it has actually consistently generated higher sales and profits. It has also improved its higher purchase receivables and asset quality, which is the NPL lah. NPL at 1.2% is actually their lowest at the time, so which is very good. It has a large pool of customers, 32,000 borrowers, so that is actually very good. That means 30, that one to me is very important, because if let's say one borrower default, right, I still got 31,999 borrowers still paying their loan, you know. So that means to say I still can earn my interest income and my dividends. So the pool of customers is, to me, is actually very important. It has consistent payouts of dividends, that's very good. But of course, the slight disadvantage is that the amount has been diluted due to increased shares. So that's a negative turn off lah, but I'll put that as a minus point for now. It plans to actually disperse more higher purchase loans after rights issue. That to me is okay. Dividend yields is actually above its 5-year average. 5 years because at that time it's the 5th year after it has launched its IPO. But if you look at what I've done in the past, my figures go all the way back to 2010. That's where I get it from the IPO lah. Which means if I got 10 years data, I will definitely do 10 years lah. Okay. And the stock price dropped to $1.20 levels. All right, as shown on the screen here.
Was there a reason why the stock price plunge when the value of the company go up, the sales and profit go up?
I don't know. So I see that's an abnormality lah. Okay, that I think this is probably the second or third stock that I bought, right, which has this kind of abnormality, and I like it one. I like all these kind of things. Usually it doesn't. Usually it may not happen. All right, but I suppose because this stock is not famous, it's not a blue chip stock. It's a small company, and maybe people will go and invest in other things, and they are not interested in this particular company. Don't know for what reason lah. But anyway, I'm interested, so I bought lah. Okay, and there you go. This is actually the final, and this is where it stands right now. Okay. So this is what happened after 2 years, and these are the results that I actually gathered lah.
Very impressive.
Very impressive.
Now 44 cents per share.
Now it looks impressive, but if you can see, after I bought, right, which is at the the horizontal, the vertical line that I actually, you can do that with Google Finance All right. Actually, I intend to do personal marketplace, but then don't know how to do. Maybe they change the layout or something. So I use Google Finance this time lah. So if you look at the vertical line, represents the time that I bought. And in 2018, right, the price actually did nothing. The price actually did not go anywhere. It remains at $1.20. Actually, that's a very good time to increase your holdings. But I did not do anything lah. All right. Not because I don't think the stock is good. It's just that there are better stocks lah. All right, there are better stocks that have given me better value. Therefore, I invested my money into other stocks lah. But also using the same principles that I've actually shared with you. But I think if let's say Aldesa Resources is if it's your preferred stock, then I think it's a very good time to actually increase your holdings at that time. Now in 2019, see, that's when things happen lah. People start to take notice of this stock. Why? Because the dividend yield is actually above 5%. All right, above 5%, and then people who actually bought it at $1.20, right? They quietly already make 5-6% in dividend yield, and everyone wants to get a cut, and therefore the price, as you can see, skyrocketed. But it takes a while before that happens. Okay, and therefore it went up all the way to $1.65, that kind of level per share as I speak today. So fast forward to 2019, so these are my investment results. So in 2018, I have collected 6.75 cents in dividends they paid, and therefore my investment returns for 2018 is 5.53%. That's my dividend yield. And for dividends 2019, which is up to March 2019, they paid 7 cents. Oh, because they have increased their earnings. So increased earnings means increased dividend lah. And increased dividends, so I have better dividend yields lah. Like 7 cents divided by my purchase cost of 1.22, and I get 5.74%. And in terms of capital gains, I'm not too sure what's the price right now. Maybe it's about 160 something lah. Okay, maybe Shane can actually check out for me. But when I do
164.
164, ayah, 2 cents lower. Now, I believe that all of you are smart enough to actually calculate my capital gains. All right, but let's say if it's $1.66, therefore my capital gain is actually 36.07%, and in 2 years' time, my total returns work out to be 47.34%. All right, I won't give you a CAGR, which is CAGR kind of returns. But if you want to know what's my annualized return, just take 47% and divide by 2 lah. Still 20 plus over percent. Not bad, huh? All right. Okay, so that is actually my venture into Eldesa Resources Berhad. So the question is this: will you buy this stock? So Shane, will you buy this stock at $1.64 today? How about this? Maybe you can do a poll. Would you buy this stock at $1.64?
Yeah, if you will buy, please write it in the chat groups whether you will or you will not.
So
let us know.
Yep. Let's see what's the response like. And this is actually probably the stock price that you see right now.
Okay, there are yes, there are no. And I would say slightly more people are inclined to no. Yeah, maybe 60% of the attendees say no, 40% of them say yes.
Okay.
Yeah.
So that means
more people say no.
So more people say no, right? So people who say no, actually they get the message lah, all right? Because they are investors lah, all right? So people who say yes, this one is actually for you. You see, when it comes to stock investing, if you focus on capital gains, it's always about buying low and sell high, right? But the problem is this: the reason why you can't do buy low and sell high is because number one, you don't look at annual reports, you don't calculate all these kind of things. Number two, when you look at this kind of stock price, right, you say, oh, you habis, stock price tumble, stock price falling, how to buy? Cannot buy lah, this one. All right, look at the stock price, keep on falling, sure got problem one. So therefore, how would you buy at $1.22? All right. And right now, if you buy, all right, why do you buy? Because you see, hey, wow, the stock is now getting hot. The stock now is actually going from $1.20 to $1.60-$1.70, because you're attracted to the spike in stock price. So that is the biggest mistake I find in most people who want to actually make money in the stock market. So if you have this tendency of buying stocks because of that, right, please don't do that lah. All right, because when you try to buy stocks at $1.66, which means to say you are actually a bit too late lah, too late to the party, at least later than me lah, because I bought it at $1.22 ma. Okay, so the answer I believe is no. But anyway, this is actually the fast forward results lah for the extended version for 2018 and 2019. As you can see, the dividends per share, it has been quite stable. 7.5%, all right, more or less stable, consistent income. All right, so the latest dividends per share is 7 cents, and I have actually extended its dividend yield average from 5 years to 7 years. So right now, when I was preparing the slide, which is just a few weeks ago, the 7-year dividend yield average is 5.41%. Okay, the latest DPS is actually 7% per share, and based on $1.60 lah, the current dividend yield is 4.38%. which is even lower than the lowest range leh. Huh? That means, what that means is that this stock right now is
Overvalued.
overvalued.
From the dividend yield point of view.
From the dividend yield point of view, correct. That's why for people like me, I say, I just hope that the price will go up, or if not, I still collect my dividends, or if not, if I find something new to buy, then maybe I sell off and move on to the next undervalued stock.
So am I right to say that your strategy is to focus on companies that is undervalued
Yes,
in relations to their dividend yield average, and then you buy them and you focus on the dividend yield, and then whatever comes in capital gain will be an added bonus to you.
correct.
Right. Okay. So this is what you want to share with all the attendees today.
Yes,
Okay.
and by doing that, it doesn't mean that I get very bad capital gains.
Yeah. Because when investors see that, oh, this company present to us a very attractive dividend yield, and then investors will come in later and then to buy up the share price.
Yes, and therefore it drives up the share price, and by the time that happens, then I think it's a bit too late already lah.
Okay, but you already got the capital gain that you desire.
Actually, I didn't really aim for capital gain, but since it already happened, then I'm in a position like, I can choose to sell today or sell tomorrow. It doesn't really affect me anymore.
Okay, I think there are many people are interested. Will you sell this today? I mean, will you sell Aldesa at this price? The attendees are asking.
To me, I think I'm considering to sell.
You're considering to sell, okay.
Because if you want to sell a stock, right, the thing is that I need to find a new home for my money.
Okay.
I need to find a new sanctuary, a new place to park my money so that I can, continue to make my dividend income lah. All right. But so far I haven't found any yet. All right. Especially not in Malaysia lah. Maybe in Singapore or Hong Kong, but Singapore also not so value right now lah. Okay. But if it's Malaysia wise, actually there are a few that I'm actually looking at, but I'm still monitoring on. So which means to say, until I find a nice home for my nice home for my money, then
you'll keep the shares.
I'll keep the shares lah.
Okay, when you find it, let me know. We go yum cha.
So this is actually the difference between investor and speculator. All right, so investor, they will buy at $1.20 because at that time they offer very good value. But if you are tempted, motivated to buy Aldesa because it's now $1.66, $1.64, then you are just speculating lah. You're just betting your money on this particular stock lah. So here's something that I would like to share with you also, which is actually we welcome investors like speculators. Because without speculators, right, our capital gain won't be so high one. Because they tend to buy stocks at the wrong time, which is like right now lah. So when they keep on buying the stock, right, then for us we just sit and enjoy the ride lah. All right, because we already buy it at a very low price. All right, and speculators tend to buy at such a high price, try to actually, increase the price further, and that's where our huge capital gains come in lah. So what I want to say is this: of course, for investors, we need speculators to make money. But since you are listening on this webinar, I will discourage you, if you want to make good money from stock investing, don't be a speculator lah. Be an investor.
So that's the take-home message.
Yes. So key takeaway points. Then I'll end this session. First one, dividend stocks do give fantastic capital gains. But I never really aim for capital gains. It just happened. All right. Second, have an investment system and use common sense. All these things, right? You can find it for free information from Bursa Malaysia, and all you need to do is just be diligent enough to do all the dividend yield calculation, do all the past 5 years, past 10 years, calculate the average, buy if it's above average, sell or don't buy if it's below average. and the average is fair value. And of course, have a system like step 1, assess the quality of the stock. Step 2, calculate the dividend yield and follow this order. Never go from step 2 to step 1. It's always step 1 to step 2, because what you want to do is to invest in a resilient portfolio. You want to build a portfolio that is so resilient, right, that it withstands economic crisis, and you need good stocks to do that. Fourth one is always do valuation, because what's affordable may not be cheap. Like for example, just now the case, $1, $10 doesn't mean that $1 is always cheaper than 10. Always find out the average dividend yield. That's when you know whether or not the stock is cheap or expensive, which is the fifth point.
Okay, so I want to ask you a technical question.
Yep.
How do you find the average? Like, because there are over 200 trading days kind of prices, right? Because when you talk about dividend yield, it's relative to the prices that you check.
Yeah.
So do you get like the simple moving average kind of price?
No, you see, this is that. You see, all these.
Yeah, for example, 2013, right? How do you calculate that the dividend yield is 5.1%?
This one, actually, this stock very funny because they give you the dividend yields in the annual report. That means they give you the 5 years dividend yields in the annual report, so you don't need to calculate. That's one of the good things.
So do they base it on the last trading day price?
Yes, it's the last trading day price
of that financial year.
Which means if you see on the table, 2013, right? The financial year end is 31st March, right? Okay. Therefore, the share price stated would be 31st March 2013. That's the price you use.
Okay, so they use the share price as of the end of the financial year, the last trading day of the financial year.
If you can't get that, just find anything close to that lah. You just need a ballpark figure for the average.
Okay.
Yep. So that is, that's all I prepared for you guys. Hopefully you enjoy my sharing session. I hope I didn't take.
Okay, great. Thank you so much, Ian, for your preparation for this dividend yield masterclass. So we are now coming to the question and answer session. So, before we do the question and answer, we want to launch a poll first. Okay, another poll. Okay, so where do you think FBM KLCI will go tomorrow? Do you think that they will go up 20 points or down 20 points, or range in between negative 20 points and plus 20 points? Please tell us, what do you think the market will go tomorrow? Of course, we don't know which one is correct as of the moment, but just want to gauge whether you all are more bullish or you all are more bearish. Okay. In the meantime, if you have any question, please write in the question and answer box, all right, while we are doing the poll. Okay, there are over 60% of you voted. So let me close the poll right now and share the result with you. Okay, so here is the result. 14% of you think that the market will go up 20 points. 19% of you think that the market will go down 20 points. While 67% of you think that the market will actually range in between negative 20 points and plus 20 points. Okay, so this is what you think the index will go tomorrow. So let's see whether it will be bullish tomorrow, bearish tomorrow, or there will be a range market tomorrow.
So Shan, where do you think it will go?
I think wow, I think it will range. Okay, I will pick the third one. I will follow the majority. Actually, I should answer you. I don't know.
I don't know.
This is what I learned today. Okay, I don't know. Which is a very good answer. Okay. Oops. Just give me a minute. Okay, now let me see the question.
Yep.
Question number 1 is, how do you screen this stock out of the 900 companies that is available on Bursa Malaysia to notice this stock?
Good question. All right. That's where you read annual reports law. I mean to say you don't screen. Actually, this one is by. All right. First, I have this investment game plan. Then the second thing is that you got to read reports. You got to dig out all this information one by one, and there's no, actually I don't really use screeners and stuff like that lah. But then it's just a mere diligent lah, just be diligent in reading annual reports lah. So I just stumbled across this particular stock via reading annual reports. But before that, I think I have the interest to actually look at this particular stock in greater detail because I walked past through a retail shop lah, a furniture retail shop that is branded as Aldesa lah. So I thought it's very interesting. So I began to look it up lah, and that's how I got to know about this.
Okay, so the lesson is that please pay attention when you go shopping, right?
Yes.
Not only you buy the product, you must know what company owns it. Is it listed or not?
Yes.
Are there more people buying the products? More people are buying the products. The next question you ask, is it listed?
You can learn a lot of things about. You can learn a lot about investing, right, by just going to the shopping mall. Look at Padini. Go to the market, you may find Nestle products, Ajinomoto, and all this kind of stuff.
All right. Okay. Now the question is, next question we have on the screen is, are dividends taxable?
Not in Malaysia. I mean, if it's paid out from the stock, no.
Okay, the answer is not taxable. All right. So now, how about your take on dividend reinvestment scheme? Should we reinvest or take the cash?
It depends. Okay, when you get your dividend reinvestment statement at that time, it will state how much is the price that that the stock, right? If let's say you were to opt for the dividend reinvestment plan, okay, let's say Maybank, okay, let's say Maybank. Let's say you have a target price, okay, you know that for example, you set it at $9 ringgit lah, okay. And I know that Maybank, it has gone between 8 to 10 ringgit, all right, for the past 5 years and stuff like that. It has been ding dong 8 to 10 ringgit. Okay. Now, if let's say your purchase price, what you decided in your heart, all right, is $9, 9 ringgit, and then the dividend reinvestment plan, right, it allows you to buy Maybank at below $9, let's say $8.20, then opt for it because it's below your target price. So if let's say the dividend payment, the dividend reinvestment plan is allows you to buy the stock at $9.20, then opt for cash because it's above your target price. So it depends on your target price of the stock. And target price, how do you calculate that is very simple. If you want to get, if let's say Maybank, if it pays about 60 cents and you want to get 6+, you want to get a certain percentage of dividend yield, you just work backwards. That's where you get your target price. All right, your maximum buying price. Anything beyond that, anything beyond that you don't buy, anything below that you buy. That's my answer.
Okay. So the next question is, there are many cases of companies where, dividend company, and after they pay dividend, their share price also drop. So what is your view on this?
Doesn't matter because I'm not really into short-term trading or whatsoever. I don't really, you see, the whole idea of buying a dividend stock, right, is actually tabulated, is summarized based on the screen. I'm not too sure whether are they looking at the screen?
Yeah, they're looking at your screen.
Okay, based on the table as shown above, I want to actually make consistent dividend yield on a regular basis. All right, that is my whole game plan, which is long-term dividend income. Like just now what I said, I need the dividend income to be paid on a consistent basis so that I can pay my insurance premium. And insurance premium, when you buy insurance at the time, you don't buy insurance for 1 year. You buy and perhaps you may want to service that policy for the next 10, 20, 30 years or as long as you live. So because of that, you may want to invest in something that pays dividends for the next 10, 20, 30 years. So that is the mindset. So I'm not too concerned about the minor share price drop after the dividend has been paid out. To me, that's a minor issue. The bigger issue is whether or not it can pay on a long-term basis.
How about like a major share price drop after dividends? Like, for example, let's say AirAsia.
The problem is, you see, um, AirAsia does not have this kind of financial records, so don't buy lah.
Oh, okay.
But I won't say I mean to say AirAsia is suitable for some people lah, but not people like me lah. You see, because I want something like this, cantik, consistent increase. I don't want something that is being affected by if let's say the fuel price is low, then the profits go up. If the fuel price go if the fuel price go up, then the profits come down. I don't like that kind of thing. So that's up to personal preference lah. So it's not it's not the fault of AirAsia or not to buy AirAsia or not. It's matter of your plan, what you're trying to achieve when it comes to stock investing.
Okay. Now the next question on my screen is, what is your advice on the dividend yield stocks during a recession? So would your strategy here have to be changed in any way during recession?
Recession is the best time to buy dividend paying stocks, because that's when your yield is very cantik. Your yield is the best when things go wrong, you see. So when things go wrong, that's when you buy. When things go, you see, that's the thing. When things, let's say this particular stock chart, it seems like things go very wrong. When things go wrong, that's when you need to take a second look on this particular stock and see whether or not it is one that is consistent. Usually, I like to buy stocks when the stock price has actually fallen, not when the stock price is like this, shooting up like rocket like that. That's the wrong time to buy stocks for me.
So the next question is, how do you set your exit strategy?
Usually I don't really place an exit strategy, but if you want, okay, let's say for example this, okay, not this, okay, now let's move forward to this, okay, let's use this as an example, okay. Dividend yield range 5% to 5.8%. The average is 5.4. So you can actually plan your exit strategy like this. If the dividend yield based on today's price is below 5%, you can sell. You can use that as an exit strategy. All right. If let's say you want to buy low, then you might want to consider buying the share when the dividend yield is above 5.4%. as close as to 5.8% as possible. But you see here, the whole game plan here is based on dividend yield. All right, the focus is on dividend yield. All right, if you want to be capital gain minded, of course you won't be looking at dividend yield lah. But the irony is that dividend yield investors tend to make a lot of capital gains by focusing on dividend yield.
Okay, like you focus on dividend yield.
Of course, there are many other friends who actually did very well because they focus on something which is more common sense, more consistent, and more recurring in nature lah.
Okay.
Not one-off gains and stuff like that.
Okay. Now let's do the last questions from attendee. He asked that, how about for small investor, like we only have like 10,000 to invest, like 5% yield is only like 500 ringgit in terms of dividend. So should we still focus on dividend yield for small investor? Because like for them is that it will take a rather long time to build a portfolio of bigger amounts.
Okay, I have many answers for this one. All right. Number one, if you think that 5% dividend yield is low, right, then I would say this is best not for you to invest in a stock.
No, I mean what he means is that 5% compared to a small capital is very low.
Yes, and that is the biggest mistake that a lot of people make, especially millennials, because when they have 10,000 in capital, what they are thinking about is not the 500 ringgit in annual dividend. What they want is, can the 10,000 become 20,000? Can the 20,000 become 40,000? Can the 40,000 become 80,000?
In 1 year.
In 1 year. I want, especially that. That's why they are. That's why they are more. How would I say? They are more receptive towards something that pays 2% per month in returns, which is not so realistic. Okay, not to say all of them will fall into these kind of schemes, but then they have the tendency to do that because they want quick money. Okay, so the idea here is stock investing is to me is a long-term game. You need a good strategy to actually bring you from where you are right now to where you will be in the future. Okay, so if you are thinking this, if let's say you think that okay, dividend yield investing is not for you because 10,000 you invest and then you get $500 a month, it's very boring. Yes, I agree, it's very boring. Okay, but if let's say you don't want this kind of thing, it's best for you not to invest in a stock. All right, because what most people tend to do is that they'll take this 10,000, they try to get capital gains in the stock market, and they fail miserably because they are very, because they will always want to, usually what they do is this, they take the 10,000, they'll buy when the stock is spiking up like this because they want to chase fast money, and that is very, to me it's very dangerous lah for most people. There are people, okay, for people who invest solely for capital gains, there's a huge difference between people who are just starting off and try to double or nothing, or try to actually double their money in a very short span of time, and the difference and between people like this and people like you lah, Shane. No lah. I mean, I'm just using you as an example. There are growth investors, all right? These are growth investors who know what they are doing. They may not want the dividends, but they know how to pick stocks. All right, if they are value investors, they will definitely do all the analysis, and they will actually increase their chances of getting capital gains using that. But it takes more experience for you to actually get into that. Okay, so if you want to get small wins, then of course you can use the dividend yield as a game plan. But if let's say, for example, today you have $10,000, and if you want to really improve your financial situation, the best idea is not to invest in stocks. The best idea is to take the $10,000, right, and to learn a skill. That means you go and learn a skill that will make or increase your income for a lifetime. That one will be more life-changing than just putting your money in some unit trust or ETF or stocks. Go and take the $10,000, go and sign up for a course, learn a skill that will dramatically improve your income, master a skill, whatever skill that may be, and make a trade out of it. I think that is more impactful than just putting your money in stocks.
Okay, all right. So like start a small business.
Yes, small business.
Okay, all right. Thank you very much, Ian, for your wonderful sharing today on dividends yield masterclass. So our next webinar is on next Tuesday. It will be in Chinese called 菜鸟成功投资三部曲, which means that the three things that a successful newbie investor need to know. Okay, which happens next Tuesday from 8:30 p.m. to 10 p.m. The registration link was already given in the chat group. Please go there and register yourself if you want to attend these Chinese webinars brought to you by Bursa Malaysia, happening next Tuesday at 8:30 to 10 o'clock. All right, so well, thank you very much for tuning in until the end of this webinar, and thank you so much, Ian, for joining us today as our guest speaker to share with us your experience as a dividend investor. I hope all of you here have gained one thing or two from Ian's Thai sharing today, and we will see you again next Tuesday.
Yep.
Okay, and until then, this is Shane Chu signing off.
Right. Thank you so much for having me. Bye.
Yeah. Thank you, everybody. Bye bye.